Hi, welcome back to my channel. I am Tanya. Today we're going to be talking about the importance of a pre-approval. First off though, I did want to talk about the difference between a pre-qualification and a pre-approval. A pre-qualification is just an estimate of how much house you can buy, while a pre-approval is actually good for 60 to 90 days. They're going in and looking at all of your numbers and making sure that everything works so you got actually pre-approved to buy that house. So to get this valuable pre-approval in your hands, you're gonna have to fill out an application from your local lender. I typically recommend that you shop around with at least 3 lenders, just because you can shop around for things like interest rate. Perhaps one bank is giving you better loan options, just different things like that. And here are the main 5 things that you're going to need for that application. First of all, you're going to need to prove that you make some money. That is the first thing. Obviously, you cannot buy a house without having some proof of income. If you are self-employed, this process is going to look a little bit different for you, but don't worry. All you're going to need to do is provide 2 years of tax returns that show that you have earned money in the business that you're running. Easy. If you work for someone, meaning you have a W-2, all you really need to do is provide the last year's tax returns and your pay stubs. And if you earn additional income, you're going to need to provide those statements as well, especially if you're getting alimony or child support. The second thing that you're going to need is proof of assets, meaning that the bank wants to see that you've got enough money for the down payment, closing costs, and just a little bit extra to just show that you can pay that monthly payment. And the amounts will vary depending on what type of loan. If you are getting a 3% conventional loan, and you're buying a house that's $200,000, you're going to need to show at least $6,000 plus and maybe another $6,000 for closing costs, plus an additional $1,000 for your payment. That is going to total $13,000. The next thing that you're going to need is a good credit. For most banks, you guys can get away with a 620 credit score. Some banks will allow you to have a 580. Some banks will even let you have a 560. But just remember, the lower your credit score, the higher your interest rate. So it's better upfront if you've got a better credit score, just because you'll be paying a lot less over time. Number 4 is that you're going to need employment verification. I know we have already touched on this, but it's so important that you can provide proof that you have a job, or you run your own business, or you're making money some way to be able to pay that monthly mortgage payment. And you know, this seems pretty obvious, but again, it's just the bank ensuring that you can pay back their loan. The bank is gonna get their money one way or another, but they just like to have everything checked on the front end. Okay, and then 5 is going to be other documentation. We've already talked that they're going to need your taxes, they're going to need some form of ID, that application, and along the loan process, depending on what you buy, they're going to ask for different documents, like your social security, your credit report. They're basically going to ask you for your whole life, as I like to tell my clients. They're going to be collecting a lot of paperwork during this transaction, so you want to make sure you have everything ready. And last thing to note, some of y'all may not get approved to be able to buy a house, and that's okay. Because the bank has very strict requirements, they're going to want to make sure that you are ready to buy a house. And typically, if you do not get approved right then and there, they have options for you to either build up your credit if that's something that you need, or they'll explain, hey, so you need to pay off this car or do this step before we can approve you. They'll give you an action plan so that you are able to buy your house, and you won't have to worry as much about that monthly payment because you know that you're able to afford it. And another last tip, I know I keep saying that, if a mortgage company pre-approves you for a really high amount, make sure that you're looking at the payment, not the pre-approval amount. Why? Because you might be able to qualify for a $300,000 house, but right now that mortgage payment is about $2,000, maybe a little bit higher depending on your interest rate. And you find that that would be just way too much with your current lifestyle and what you're doing, so you opt for a $1,500 payment. And you'll have to look at what that equals exactly, but it's going to be around $250,000. So make sure that you're looking at the payment so that way you're comfortable with the monthly payment, because you also don't want to overextend yourself. Okay, well that was it for this video. If you guys liked it, please make sure to subscribe and hit the thumbs up on this video. I really appreciate it. It really helps more people find this content. And if you are interested in which are the best loan options right now, I recently made a video with a loan officer that you guys can check out right here, and it'll give you all the details of the best loan options right now. Okay, well that was it for this video. I hope you enjoyed, and I will see you in the next one. Bye.